Good day, Sir Jerry Calayan classmates. I hope that you're doing well. I'm Carl Calderon, and I'm going to discuss the main financial statements of a non-profit organization, particularly the statement of financial position of a non-profit organization. The contents of this report will include the following. 1. The financial statements of a non-profit organization. 2. The difference between main financial statements of a non-profit organization with those of a for-profit corporation. Number 3. Statement of financial position of a non-profit organization. The fourth one is the purpose and focus of statement of financial position. The fifth, classification of assets and liabilities of statement of financial position. And the last one is the three classes of net assets as classified in the statement of financial position of a non-profit organization. Furthermore, we will also give an example of a statement of financial position of a non-profit organization. I will also give a sample computation about this particular topic so that you'll further know about this discussion. So, grab your ball pen and notes. Let us now begin this topic.
So, good day everyone. Our discussion will be about financial reports and disclosures with a focus on the statement of financial position of non-profit organization. So, let's start first with the financial statement of a non-profit organization. So, a non-profit entity issues a different set of financial statements than the statements produced by a for-profit entities or corporations. According to the Statement of Financial Accounting Standards number 117 of the Financial Accounting Standards Board, a complete set of financial statements of a not-for-profit organization shall include the statement of financial position as of the end of the reporting period, a statement of activities, and a statement of cash flows for the reporting period and accompanying notes to the financial statements. Furthermore, the Financial Accounting Standards Boards now requires every non-profit to present expenses by function and nature in one place. So, as you can observe here, 4 of these are somehow similar to common for-profit company statements, with the functional expenses statement being unique. So, the functional expenses statement is something that is exclusive for the non-profit organization. So, to better understand this discussion, I have come up with this particular table. So, in here, we can see the difference and similarities between main financial statements of a non-profit organization with those of a for-profit corporation or entities. So, a non-profit organization and a for-profit corporations have a statement of financial position, statement of cash flows, and notes to financial statements. So, these non-profit organization and for-profit corporations have somehow similar in terms of their statement of financial position, statement of cash flows, and notes to financial statement. In a non-profit organization, they have a statement of activities. And for a for-profit corporations, they have income statements. So, these two are somehow similar. The only thing that is unique to the non-profit organization is the statement of functional expenses. So this is something that is unique and exclusive to the non-profit organization. Now let's go into the purpose of a set of financial statements. So the primary purpose of financial statements is to provide relevant information to meet the common interests of donors, members, creditors, and others who provide resources to not-for-profit organizations. More specifically, the purpose of financial statements, including the notes to financial statements, is to provide information about the amount and nature of an organization's assets, liabilities, and net assets, the effect of transactions, and other events and circumstances that change the amount and nature of net assets, the amount and kinds of inflows and outflows of economic resources during a period and the relation between the inflows and outflows, how an organization obtains and spends cash, its borrowing and repayment of borrowing, and other factors that may affect its liquidity. and the service efforts of an organization. So that's the purpose of a set of financial statements that is really helpful for the donors, members, creditors, and others who provide the sources to not-for-profit organization. So, what is a statement of financial position? So, a statement of financial position is similar to a balance sheet that reports the organization's assets and liabilities. But since this is a non-profit organization, there is no owner's equity or stockholders' equity, but there is net assets. So, this is something that is unique to the statement of financial position of an NPO. No? They have net assets, which is classified into three. On the other hand, for-profit entities or corporations have owner's equity or stockholders' equity. So again, net assets is something that is unique to the statement of financial position of a NPO. Now let's go into the purpose and focus of a statement of financial position. So the primary purpose of a statement of financial position is to provide relevant information about an organization's assets, liabilities, and net assets, and about their relationship to each other at a moment in time. So this is just like what is the purpose of the statement of financial position of a for-profit organization. The information provided in a statement of financial position used with related disclosures and information in other financial statements helps donors, members, creditors, and others to assess the organization's ability to continue to provide services and the organization's liquidity, financial flexibility, ability to meet obligations, and needs for external financing. Also, a statement of financial position shall focus on the organization as a whole. Again, as a whole. And shall report the amounts of its total assets, liabilities, and net assets. So now, let's go to the classification of assets and liabilities in the statement of financial position of a non-profit organization. So a statement of financial position, including accompanying notes to financial statements, provides relevant information about liquidity, financial flexibility, and the interrelationship of an organization's assets and liabilities. That information generally is provided by aggregating assets and liabilities that possess similar characteristics into reasonably homogeneous groups, just like what we have learned from the practical accounting, of course. So, for example, entities generally report individual items of assets in homogeneous groups such as cash and cash equivalents, accounts and notes receivable from patients, students, members, and other recipients of services, inventories of materials and supplies, deposits and prepayments for rents, insurance, and other services, marketable securities and other investment assets held for long-term purposes, and land, buildings, equipment, and other long-lived assets used to provide goods and services. It should be noted, however, that cash or other assets received with a donor-imposed restriction that limits their use to long-term purposes should not be classified with cash or other assets that are unrestricted and available for current use. For example, a certain donor contributed 1 million pesos in cash. And it is a donor-imposed restriction. No? So, how should we classify it? Should we classify it as a cash and cash equivalents? The answer for that is no. Since it is a restricted form of asset, it should not be classified as a cash and cash equivalent. Also, the statement of financial position of a non-profit organization is similar to that of a for-profit organizations or corporations because it focuses on liquidity. Assets are presented in order of their proximity to cash, and liabilities are presented according to the nearness of their maturity and resulting use of cash. So, there are three classes of net assets as classified in Statement of Financial Position of a non-profit organization. So, the following are permanently restricted net assets, temporarily restricted net assets, and the unrestricted net assets. A statement of financial possession provided by a not-for-profit organization shall report the amounts of each three classes of net assets based on the existence or absence of donor-imposed restrictions. So, this is how these three are categorized based on the existence or absence of donor-imposed restrictions. So, let's go into the first one, the permanently restricted net assets. Excuse me. So, a permanently restricted net assets is restricted by the donor in such a way that the organization will never be able to use the contribution itself. However, the organization may be able to use the income therefrom. So, in this illustration, we can see how this thing works. So, the interest can be used to fund the programs of the NPO. However, the principal can't be used for that since it is permanently restricted. So, moreover, information about the nature and amounts of different types of permanent restrictions or temporary restrictions shall be provided either by reporting their amounts on the face of the statement or by including relevant details in notes to financial statements. Separate line items may be reported within permanently restricted net assets or in notes to financial statements to distinguish between permanent restrictions for holdings of assets such as land or works of art, donated with stipulations that they be used for a specified purpose, be preserved, and not be sold, or or asset donated with stipulations that they be invested to provide a permanent source of income. Excuse me. So now let's go into the temporarily restricted net assets. So temporarily restricted net assets are those items that were received with a donor-imposed restriction that will be satisfied in the future. So it's generally within 1 year. The donor's restriction may be for a particular purpose or program or for use in a specified time period. So to better visualize this, I've come up with this example. For example, a certain donor contributed 1 million in cash only to be used for the victims of Typhoon Yolanda. So basically, it has a restriction into it. So it will be classified as a temporarily restricted net asset since that particular cash or money will only be used for the programs intended for the victims of Typhoon Yolanda. So furthermore, similarly, separate line items may be reported within temporarily restricted net assets or in notes to financial statements to distinguish between temporary restrictions for support of particular operating activities, investment for specified terms, use in specified future period, or acquisition of long-lived assets. No? So donors' temporary restrictions may require that resources be used in later period or a specified period, or that resources may be used for a specified purpose or both. For example, gifts of cash or other asset with stipulations that they be invested to provide a source of income for a specified term and that the income be used for a specified purpose are both time and purpose restricted. So those gifts often called are term endowments. So now, what is an unrestricted net assets? No? So unrestricted net assets are those items that have no donor-imposed restrictions. It is available for immediate use and any purpose. A board-restricted fund is not the same as a permanently restricted fund, although many groups mistakenly call it such. Technically, a board-designated fund will appear on the financial statements as unrestricted because the limitation was imposed by the board of directors rather than the donor. So let's give an example for this one. For example, a certain donor donated 1 million to be used for the general functions of the NPO. So basically, it is unrestricted. So it will be classified as an unrestricted net assets. So moreover, a board restricted fund, no, you should remember this one. A board restricted fund is not the same as a permanently restricted fund, although a lot of people mistakenly call it such. So, unrestricted net assets generally sort from revenues from providing services, producing and delivering goods, receiving contributions, and receiving dividends or interest from investing in income-producing assets, less expenses incurred in providing services, producing and delivering goods, raising contributions, and performing administrative functions. Now, to better visualize what is this discussion all about, this is an example of a not-for-profit company statement of financial position. So, as you can observe here, this is somehow similar to those of a for-profit companies or entities. They also have cash. They also have marketable securities, no? Accounts receivable. They also have liabilities, of course, no? However, something that is unique in this not-for-profit company is their net assets. They are classified whether unrestricted, temporarily restricted, or permanently restricted, no? So, as you can see, observe here, net assets are categorized into 3. So, that's it. And the total net asset, of course, is equivalent to this sum of the unrestricted, temporarily restricted, and permanently restricted net assets. Now, maybe some of you still don't understand much of this topic. That's why I've come up with this simple computation. So, FEWA organization, a non-profit organization, disclosed the following in its 2021 financial statements. So, board-designated funds of 3,600,000, received 5 million from an anonymous donor who stipulated that the contributions will only be used for the victims of Taal volcano eruption. Received cash worth 500,000 from the fund drive of Eraser Foot Concert to be used until 2025. Received shares of Taliano Gold Incorporated valued at 1 million with no restrictions. Received 30 million from a donor who stipulated that the contribution shall be invested indefinitely and that the yearly earnings of 500,000 from it will only be used for the reforestation projects in Palawan. So the question is, how much is included in the unrestricted net assets, temporarily restricted net assets, and permanently restricted net assets? So let's solve first the unrestricted net assets. So board-designated funds of 3,600,000 is, of course, an unrestricted since, as I've mentioned earlier, board-designated funds is unrestricted net assets. The received shares of Taliano Gold Incorporated valued at 1 million with no restrictions is unrestricted. That is why the answer is 4,600,000. We get it by adding 3,600,000 plus 1 million. Now, let's go into the temporarily restricted net assets. So, it includes the 5 million pesos received from an anonymous donor wherein there is an stipulation that it will only be used for the victims of Taal volcano eruption. The cash received worth 500,000 from the fund drive of Eraser Foot Concert to be used until 2025. So, there is restrictions to it. And the yearly earnings of 500,000 from the 30 million to be used for the reforestation projects in Palawan. So, this is the income from the 30 million, right? So, by adding this, we get 6 million, no? So, that is the total temporarily restricted net assets since there are restrictions on this following scenario. So, the permanently restricted asset is composed only of 30 million. So, it comes from the donation wherein the stipulation is that it will be invested indefinitely. So, that's it. I hope that you learn a lot.
To my fellow future accountants, I hope that you learned a lot from this presentation. I hope that you find this presentation helpful. For those who want to work in a non-profit organization one day, please don't forget about this topic. You'll surely find this helpful. So, thank you and